Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, we're going to look at the best mortgage interest rates that you can get in lots of different categories. So we're going to look at HMO mortgages, which you can see on the screen already, and that's a house of multiple occupancy. It's a type of mortgage that you might need if you run that, like student accommodation. We're going to look at buy-to-lets in a personal name. We're going to look at buy-to-lets in a limited company. They can be different, those rates, so we're going to look at that. We're going to look at residential mortgages with a big deposit, residential mortgages with a small deposit as well. So we're going to get a real breakdown of the market, what's going on, and there's some new lenders this week. This is what happens every week. You'll get some lenders that will, what they do is they like to get an influx of business. So for example, Mortgage Works, they might look at making themselves the best rate for HMOs, and then they'll get an influx of leads for that. They'll work through those, and then eventually they'll have enough work for a period of time, and then they'll let someone else take that better deal. Because let's face it, when you're looking for a mortgage or a credit card or anything like that, you'll always look for the best rates, the best fees. And so these lenders have to swap their prices and get competitive, because nowadays we look through brokers. So I use a mortgage broker myself. I prefer that. But you can use a comparison site. And then when you use that comparison site, you look at what the cheapest deal is. It's sorted by that. It works like that, right? If you look for car insurance, you don't pay someone that's twice the price just because you like the brand. You look for what's the best rate on the market. So let's have a look at the rates today and where they stand. If you found a better rate with a different lender, I'd love to know, because that really helps, and I can help share that with thousands of people watch this video every week. And so do comment below. So if you found a better deal in one of these categories, do let me know. Or if you've got categories that you'd like to include, I'll have a look at that and add those. We have done that over the last few weeks. Haven't added any new categories this week. So while you're here, if you haven't done it already, go down in this corner. Oh, it's back to front. Over there, that's it. In that corner, smash the subscribe button, guys, and hit the bell notification. We've got new content every single day. Lots of people are commenting that these videos are helping them fix a better deal. And smash the like button, guys. That really helps me with the YouTube algorithm. Some of you get a little upset when we ask for that, but it really helps the channel grow. We want to get 5 million views this year. We want to get 50,000 subscribers. Smashing that like button, it won't hurt you, but it will help us get there. So let's look at Mortgage Works, who is a pretty big lender. They're part of Nationwide, who are one of the biggest lenders. They're actually one of the people that give us data every month as well on house prices that we often talk about. And the Mortgage Works is pretty much, last few weeks has been there for HMO mortgages. So HMO stands for House of Multiple Occupancy. It's where you have it like a student accommodation, but a lot of people have this for professional people as well, or social housing. 5-year rates on this at the moment are 5.34%, with a big, fees are big, but they are coming down. These were like 6% at one stage. They're at 3%, which is still high, but improving. So 5.34% there. 2-year deal is at 5.39. That's gone up a smidge this week. So that rate has gone up a little bit. And that again is a 3% rate. So let's look at the next one, which is limited company buy-to-lets. And so this is if you're buying a property in a limited company, which is what I recommend that you do on new stuff. So for years, I've been investing since 1999, but originally we just bought stuff in our personal name, and that's where the bulk of my property is. But now, any new deals I will buy in a limited company. I've done that for my daughters, Georgia and Amelie, and that's what I would do going forward. So if you're wondering, should you be looking at this rate if you're jumping into this, these are the rates that you should be looking at. So Mortgage Works, again, is the best lender on this. A 5-year deal is at 5.34%. Again, the fees are fairly high, 3%, but they are improving. Maybe they'll drop that to 2% soon. The 2-year deal is 4.99. This has dropped this week a smidge, which is good to see, and that's a 3% fee as well. These are buy-to-lets, so the loan to value, you'll need a 25% deposit or 25% equity. Maybe you're doing a remortgage, right? That's what they want, 75% loan to value. Personal name, NatWest have taken over this week. This has been jumping around. We've had all different lenders that have been good at this. Mortgage Works were good. Barkleys were good one week. I can't recall, somebody else was one of the weeks as well. But NatWest have actually come in. They've got some competitive rates, and these are moving down. They're slightly better than last week. So this is a buy-to-let in a personal name. I have properties like this. So if I was remortgaging, I would be looking at NatWest. They're a pretty good lender. So a 5-year deal here is 4.37%, and that's 995 in fees. A 2-year deal is 4.74%, again with the 995 in fees, and they will lend you up to 75% loan to value. So NatWest, they've been in the news. I've talked about them the last few weeks. They've been cutting fees, rates to get business, and they're pushing for a lot of buy-to-let business at the moment. So go and check that. Now, residential mortgages, we've got 2 lenders here, slightly better than last week. We've got a 5-year deal with Barkleys at 4.37 with 995 at fees, which is not bad. This is at 75% loan to value. This is a residential mortgage we're talking about here, in your own name, the house you live in, right? So 4.37% is good. I did a video a week ago, I think, about rates could get close to 4%. That's definitely moving in the right direction. A 2-year deal is 4.59%, and that's with NatWest. So the first deal, the 5-year deal's with Barclays. The NatWest deal is the 2-year deal. The fees are slightly lower on that. Loan to value 75%. Next, residential mortgages with a 10% deposit. So this could be a new purchase or a remortgage where you don't have lots of equity in that property. HSBC are the best for the 5-year deal. Now, HSBC is another lender that we've talked about. They've been in the news for dropping rates in the last week. So it makes sense that we're seeing them here. They can take on a lot of business, so hopefully this rate will stick for a while, or improve. Maybe someone will beat it, but it's 4.65%, which is a very good rate if you think about you've only got 10% equity. So it's more risk for them. The fees are 999, which is not bad either. And so rather than the percentage fees, which were on the buy-to-lets. And then for the 2-year deal, a new lender. We haven't had this lender since we've been doing this. The Loughborough Building Society have come out with a 2-year deal at 5.05%, which is pretty good. And the fees on that are 999, which again is pretty reasonable. Before all of this stuff started going up and getting more expensive, you could get fees at 500. You've got some with no fees. You've got some at 200. But they're moving in the right direction. Last summer, fees were $3,000, $4,000, $5,000 with 6% interest rates. So while they're not as good as they were before inflation, they're definitely moving in the right direction. I think realistically, £1,000 fee is probably going to be more common in this uncertain market. I think that's just where you're going to see things sitting a little bit better. So those are the rates this week. It's good to see some movement down in some categories. If you definitely want to make sure that you fix a rate, I would do now. If I was looking to remortgage any time in the next 6 months, I would fix a rate today based off the fact that rates could go up at any time. And then while you're waiting for that deal to start, if they drop their rates, you can move on to that lower rate. Right, so that what I mean by that, let's just say you've got a deal that expires in September, right? You could fix the rate today. You could go to HSBC here. You could say, I like your rate, that's 4.65. I'd like to apply for that. And you can fix that rate today. Now, if between now and September, HSBC go on a mad rate cutting exercise and they drop it to 4.25, because you haven't started the new deal yet, you can swap onto that better rate. There might be £100 admin fee, which you definitely want to pay if you can knock 0.5% off your rate, right? That totally makes sense. And so that's what I would do, is fix the rate as quick as you can, because that gives you the certainty that it's not going to go up. If rates drop, you can get it better. Now, if you fix that rate today and then your deal starts in May, for example, then let's just say you fix the rate today at 4.65. The rate then starts in May. They drop rates in September. You're not going to be able to swap rate in that scenario because you've started the new deal. I hope that makes sense. So it's the time between fixing the rate and the deal starting is when you can swap it, because it hasn't completed yet, right? They will let you swap. Lots of lenders will do it for nothing. Some will want a small fee. So that's it on this week's mortgage rates. Do smash the like button, guys. That really helps us. Do share this video. I'm sure you know someone right now that's looking for a mortgage of one of these types. Go and speak to a broker about fixing one of these, and do share the video. Do subscribe. Go and check out some more content on my channel, including this video right here.